Welcome to our tutorial on how to build an order book bot for the Forex market. In this video, we'll guide you through every step of creating a bot that not only understands the complexities of order books but also makes intelligent trading decisions based on real-time data. Whether you're aiming to enhance your trading skills or incorporate advanced technology into your trading strategies, you're in the right place. Let's unlock the potential of automated trading together and see how you can use it to your advantage in the Forex market. Get ready to transform your trading approach with our comprehensive guide. Let's dive in. Let's start our journey to creating an order book trading bot. Today, we're diving into connecting to Oanda's order book and Candle's endpoints. Since we covered these endpoints extensively in our last few videos, we will keep the explanation to a minimum, and if you require more details, please refer back to the previous videos in our Oanda's API playlist. Next, we will explore and process the data we receive, and finally, the best part, how to visualize this data with insightful plots, including support and resistance areas. In this segment, we're setting up the groundwork to connect with Oanda's API, specifically targeting Forex trading data for the US dollar to Canadian dollar currency pair. We start by importing necessary Python libraries: OS for interacting with the operating system, requests for making HTTP requests, and JSON for handling JSON data, which is a common data format used for API responses. The script then retrieves the Oanda API token, a unique key necessary for authenticating with Oanda's API, from the environment variables. This is a security best practice, ensuring sensitive information is not hard-coded into the script. After checking to ensure the API token is indeed available, we define the base URL for Oanda's practice account API. This allows us to connect to Oanda's system in a sandbox environment, perfect for testing and development without risking real money. Finally, we specify USD CAD as our instrument of interest, indicating we'll be fetching data related to the trading pair of US dollar and Canadian dollar. In this next step, we're diving into how to access and retrieve data from Oanda's order book. The order book provides a real-time view of buy and sell orders in the market, offering valuable insights into market sentiment and potential support and resistance. First, we construct the URL for the order book endpoint by combining the base URL with the specific path for our chosen instrument's order book data. This is done dynamically to ensure flexibility and ease of use for different currency pairs in the future. Next, we set up the necessary headers for our request, including the authorization header. This header uses our previously acquired API token to authenticate our request, ensuring secure access to the data. We then send a GET request to the constructed URL with our headers. If the request is successful, indicated by a response status code of 200, we proceed to process the received data. We convert the JSON response into a Python dictionary for easy manipulation and print it out in a formatted manner for review. However, if the request fails, we output a message indicating the failure along with the received status code. Let's run our cells now and get the order book data needed to explore and process. Great, everything worked as expected, and we now have the data needed to continue. Let's explore and process the data. The goal here is to extract and highlight key pieces of information that can offer insights into market dynamics at a specific moment in time. We start by accessing the order book section of our response data, which contains the detailed market order information. From this, we extract several critical pieces of information: the instrument or currency pair, the timestamp of the data snapshot, the price at this moment, and the distribution of buy and sell orders, known as buckets. By breaking down the data, we identify the instrument being analyzed, reaffirming the focus on the US dollar to Canadian dollar pair. We capture the time of the data snapshot, providing context to the market conditions. We note the price at the time of the snapshot, a key indicator of the currency pair's current valuation. Finally, we access the buckets, which will later enable us to analyze market sentiment and liquidity at different price levels. Let's run our cell and view the output. Now we get into the important part, which is working with the buckets information. This is going to be the support and resistance areas we will be plotting on the chart, aside from the candlestick data. In this part of our tutorial, we take a significant step towards analyzing the market data by organizing it into a more structured and insightful format. Using the powerful Pandas library, known for its efficiency in handling and analyzing data in Python, we start by creating a data frame from the buckets data we previously extracted from Oanda's Orderbook. Firstly, we ensure that our numerical data is displayed in a human-readable format, avoiding scientific notation which can be less intuitive to interpret. We achieve this by setting a global option in Pandas to format floating-point numbers to display with 5 decimal places. Next, we construct our data frame, buckets_df, specifying the columns we're interested in, price, long count %, and short count %. These columns represent the price levels within the order book and the percentage of long, buy, and short, sell, orders at each price level, offering a glimpse into market sentiment and positioning. After creating our data frame, we convert all its columns to float data types, ensuring that our data is uniform and ready for numerical analysis. This step is crucial for accurate and meaningful data analysis, especially when we proceed to visualize market trends and make predictive models. Let's now execute our code to confirm that the columns in our data frame have been successfully converted to the float data type. Perfect, however we can see that there are 1,700 rows. That seems like a lot of extra data. Let's have a look at our actual data frame. Okay, so when looking at the price column we don't need this much data. Our current price, if we remember, is at 1.34628. So what we can do is filter out our data frame. How we are going to do this is by setting 2 variables. One called price percentage above and the second named price percentage below. Each being set at 5% respectively. Let's run our code and view where our levels are. Nice, with our price point set. We can now filter our data. We achieve this by using the query method on our buckets_df data frame, which contains our market data, including price levels and the corresponding percentages of buy and sell orders. The query method allows us to specify a condition that rows in the data frame must meet to be included in our filtered data frame, filtered df. In this case, we're filtering for price levels that fall within a specified range, defined by price percentage below and price percentage above. After applying this filter, we're left with filtered df, a subset of the original data frame that meets our specified criteria. Viewing our data frame, we see that we went from 1,700 rows to only 264 rows and now have data close to our current price. All that's left now for processing our order book data is to split our filtered data frame into a support data frame and a resistance data frame. First, we target price levels with a short count % greater than 20%, suggesting a substantial bearish sentiment, and where the price is above our current price point. This filtered data is then sorted in descending order by price, helping us to visualize these levels from highest to lowest, indicating potential resistance levels above the current price. Similarly, we filter for price levels where the long count % exceeds 20%, indicating a strong bullish sentiment, but this time focusing on prices below the current market price. This subset is also sorted by price in descending order, aiming to identify potential support levels below the current price. We then print out the specific price levels and their corresponding short or long count percentages for a clear, concise overview of market sentiment at these critical points. Additionally, we provide a count of how many levels fall into each category, highlighting the concentration of trading interest above and below the current price. Let's run the cell and have a look at the output, shall we? Now that we have the order book data, all we need is the candlestick data and then to plot everything. Since we went over retrieving the candle data in the last video, we will not go over it in this video. We are just going to run our code cells, so if you are lost and haven't watched the video mastering candlestick charts, please go back and watch it. You can find it in the Oanda's API playlist. There are only two things we need to add to our plot candlestick function. These are our two order book data frames, the support and resistance. Let's first add in our parameters for them. The first we called support df, and you guessed it, the second one we will call resistance df. Great, let's jump into the body of the function, and add these two data frames to the chart. This is exciting. We iterate over our previously identified resistance and support levels, drawing horizontal lines across our chart for each level. For resistance areas, derived from resistance df, we plot lines at the specific prices with a high percentage of short positions, indicating where traders anticipate the price may top out. Each line is labeled with the percentage of short positions to highlight the strength of the resistance. Similarly, for support areas, taken from support df, we draw lines at prices where there is a significant long position accumulation, suggesting areas where the market believes the price may not fall further. These lines are also labeled with the corresponding long position percentages, underscoring the support level's significance. By plotting these lines on our chart, spanning from the earliest to the latest date in our candlestick data, we create a clear visual representation of potential resistance and support areas. Let's rerun our plot candlestick function with these changes and view the support and resistance areas. Perfect, we got all our support and resistance lines. 5% above and below the current price. Let's zoom in closer to the current price. As you can see, we bounced off our support line at 1.345. We actually set a limit order here on Oanda, so let's go have a look. We can also see that we have some orders sitting at 1.35, so we will set our take profit there. I'm going to show you now how simple it is to change the chart's time frame. We will set the chart to 1 hour. Let's clear all outputs. If we open up our navigation, we see a tab called Outline. This shows all our markdown cells for easy navigation. Let's head to the candles endpoint section. All we need to change here is the granularity from D to H1. Let's run all our cells and head back down to our plotting section. And there you have it. We've journeyed through the intricate process of fetching, analyzing, and visualizing key trading data from Oanda's API, unlocking insights into market dynamics with a focus on resistance and support areas. Whether you're refining your trading strategies or just beginning to explore the world of Forex trading, we hope this tutorial has provided you with valuable tools and knowledge to navigate the markets more effectively. We truly appreciate you joining us for this deep dive. Your enthusiasm and eagerness to learn drive us to create content that empowers and educates. If you found this tutorial helpful, please don't forget to like, share, and subscribe to our channel for more insights into Forex trading and financial analysis. Your support means the world to us and helps us keep producing high-quality tutorials tailored to your trading needs. Thank you once again for watching. Remember, trading involves risks, and it's important to approach the markets with knowledge, patience, and a well-thought-out strategy. We're here to help you on your journey, providing you with the tools and information to make informed decisions. Until next time, happy trading, and see you in our next video.